If you ask a person who is ekdam pro in stock market as to, dude, what is short selling, he'll say it's so simple. First sell when the price is high, and when the price falls, then buy. And you'll be like, first sell high, then buy. Asa kasa काय? Rhyming है ना? Hi guys, Rachana Ranade here, and I welcome you all to a brand new lecture on short selling. Actually, I've covered this concept in my Basics of Stock Market lecture series. So just in case if you have not yet checked it out, please go ahead and check out my entire lecture series. When I received a lot of queries from people as to, ma'am, could you just elaborate a little bit more? Could you give us a little bit more examples on how it happens practically? What type of order, if we choose it, then how it impacts the entire short selling? If you can elaborate it a little bit more, then it would be beneficial for us. These were some kind of feedbacks I received on my course, and I thought, why not make a separate lecture which details a little bit more about short selling? And that's why we're going to start about short selling right away. So first, let's understand the very base concept of what is short selling. Okay, so in short selling, like I told in the very first section of the video, here the sequence of transaction is exactly opposite. Okay, first let's understand a general transaction. How does a general transaction take place? First you buy. Why do you buy? You feel that the prices will go up, that is why you buy. Correct? So first you buy. Let us say you buy a stock at 100 rupees and you feel that the stock price is going to go up. That's why you wait until it goes up. Assume it goes up to 120, right? Then what will happen? Tell me, at 120 you will sell it off. Correct? What is your profit? 120, which is your selling price, minus 100, which is your cost price. But chronologically, what happened first? First you bought at 100, then you sold at 120. This is normal buying. Okay, when would you do such kind of a normal buying? When you are bullish on the market, when you feel that yes, markets will go up. Okay, what is the situation right now? As I'm recording the video, everyone is of the hope that some point of time in the near future, market will see some level of correction, right? At this point, it becomes a little bit tricky as to how can I earn money in falling markets. I'll repeat this sentence, very important. How can I earn money in falling markets? So you feel that this stock is currently at, let us say, 150 rupees right now. XYZ, some stock is at 150 rupees right now. And you feel that this stock will definitely come down to 120, let us say, is what you feel. So are you bullish or bearish? You are bearish on this stock. Okay. So what can you do? A normal person who doesn't know short selling, he will wait and watch till the stock comes down to 120 and then he will enter at 120. But if you're a smart investor, what will you do? You will sell first at 150 and when the price goes down at 120, you will buy. So what happened in this transaction? In this transaction, you sold something which you did not have. What? Yes, right. You sold something which you did not have, and when the prices went down from 150 to 120, that is when you bought it back. Okay. For such a transaction, you need to place an MIS order. Okay. So always remember this. Whenever you're doing a short selling, place an MIS order. But what is this MIS order? We're going to check it out in the next section. Okay. Now let's understand what is MIS. MIS means margin intraday settlement. Okay, the word itself says it's an intraday settlement. So what happens in an intraday settlement? You're going to buy and sell both on the same day. But again, remember, what is the key feature of short selling? Sell high and then when it goes low, then buy. So step number 1 is sell, step number 2 is buy. But when it is going to be in an intraday situation, okay, so it has to be done during the market hours only. Everyone knows that the market hours are from 9:15 in the morning to 3:30 in the afternoon. But please be aware that these MIS transactions are squared off by various brokers at their own time slots. Okay, like there'll be many brokers who will auto square it off at 3:10. Okay, so let's take this as an example. The previous case which we were taking, that at 150 rupees you had sold a specific stock. Okay, and unfortunately it doesn't come down but it goes higher. Okay, it goes to 160. Are you at a loss now? Yes. How much loss? 10 rupees per share. Okay, now you are sad. You are feeling like maybe in another 10-20 minutes it will come down. But broker will not wait till then. Broker will automatically square it off at 3:10. Okay, there are some brokers like Zerodha who give you that additional 10 minutes. So brokers like Zerodha would square off the transaction at 3:20. Okay, so that additional 10 minutes of hope you can have that maybe the share price will come below 150 and you may make certain profit. Okay, but then the whole question, now I hope you have understood this as to what is MIS, but still one question I'm sure remains in your mind, that if I don't have a share, how am I able to sell it? So let me try to answer this question in the most simplified manner. We'll take an example for this. Okay, so assume that you are wanting to sell a share first because you feel that it will go down. Okay, assume that you sell 100 quantity of a specific stock. Okay, then generally many of the brokers would put a minus sign here because you are selling it, no? So first it will be minus 100 whenever you are selling it. Assume that you sold it at a price of, let us say, 150 rupees. Okay, after 1 hour, the same stock is trading at 140 rupees, let us say. So what will happen? When you buy, see, when you sold, it was minus quantity. Now you didn't have anything. But when you buy it, it will be what? Plus 100 quantity. Okay. And now tell me, what is the net effect? You sold 100 and you bought 100. So what is your net quantity? At the end of the day, remember this, I had told you, MIS. This is very important for any short selling. What is MIS? Margin intraday settlement. The word itself says this is to be done on the same day. Same day, first it was minus 100 when you sold the quantity. Now plus 100 when you have bought it. So what happened at the end of the day? At the end of the day, do you have to sell your shares to anyone? Do you have to buy it from anyone else? No. Final is 0 position. What about this 10 rupees? This 10 rupees would nothing be but your profit. Okay, because you had sold it at 150 and you bought it back at 140. So 10 rupees in fact is your profit. But still some people ask, but how come someone can allow you to sell first if you don't have it? Answer is very simple for this. Our government allows it, our regulatory body allows it. So what's the problem? So in India, everyone knows this, that SEBI is the authority which is a regulator to the stock market. Okay, SEBI allows short selling in India. In fact, in 2011, there were some countries like France, Spain, Italy and Belgium who had banned short selling. Okay, simple. So if these countries banned short selling for some time, this was at least 2011 example. Latest example, let me take. During Corona time, China had banned short selling in some specific commodities, in some indices. Okay. So if that was done by a specific country, if a country bans short selling, then it will not be allowed. In fact, at that time, there were great rumors that India also may ban short selling. Okay, so had our government banned it, could it have been banned? Answer is yes. So how are we allowed to do short selling in India right now? Because it is allowed by our regulator. But what does our regulator say? Very important, that you have to cover it within the same day. You have to do it as an intraday settlement. Okay, now have you understood how can I do it? What is the answer? How is it allowed? Simple. Our government allows it, our regulator allows it, and that is why we are able to do it. But what is the precondition? It has to be done within the same day. Question is, what if I don't put this buy order? I have given you the answer in the previous section. At 320, I gave you the example of Zerodha. At 320, they'll do an auto square off. Okay, so I hope this point is clear. One last question still to be answered, that I'll do it in the next section. Okay, the last question which remains in my mind. Okay, now I'm thinking of 2 questions which remain in my mind. Number 1, when I buy the share at the end of the day, okay, so either as an automatic square off or either I place a buy order myself. There are some viewers of mine who had asked this question to me, that when I buy that share again, will I get the delivery of those shares? How will you get a delivery? As I mentioned, it's minus 100 first and then plus 100. So what is your net position? Net position is 0. If your net position would have been plus something, then you would have gotten the delivery of the shares. Okay, so I hope this is clear. For example, if you sell 100 shares, okay, and if you buy 120 shares, now what is your net position? Net position is plus 20. Then for that additional 20, you may get the delivery of the shares. But again, we'll go into complications for this, that what was your 120 order? Was it MIS order? Was it CNC order? By the way, CNC is cash and carry. Okay, but we'll not go into a mismatch, quantity mismatch example, because that will take again whole lot of time to explain this. To simplify things, will you get a delivery of the shares if you have sold first and then bought later? No, if the net position is 0. Okay, I hope this point is clear. One last point. What if you sold at 150, okay, and stock hits an upper circuit? I hope you know what is an upper circuit. Upper circuit is a scenario where the stock moves up, let us say 5%. Okay, so assume that the stock opened at 150, you sold at 150, the stock goes to 180 and it gets locked at 180. Okay, now what happens at upper circuit? There are all buyers but no sellers. So I hope this point is clear. I'll repeat quickly one more time. Okay, so you had sold at what? 150. What happened? The share price went up to 180. Now the share is locked at an upper circuit. What is an upper circuit? All buyers but no sellers. You are one of the buyers who is desperately, you are dying to buy that share, but there is no seller. Now what happens? Now this is a point where your share gets auctioned. Okay, now what is share auction is again a very big discussion, but still I will try to cut it short. Okay, share auction is nothing but now a scenario where you sold it but you were not able to buy it, neither at 335, 310, nor at 320 also. Okay, market closes at 330, still you have not bought back the position, you have not squared off your position. So tell me what happens now. Was it minus 100? Yes. Was it plus 100 also? No. Now what is the net quantity? Net quantity is still minus 100. Now you have to buy it come what may and honor your contract. But market has closed, it is 330. Now what happens is that your broker buys the shares on your behalf after 330. Okay, so there is a time slot after 330 for another half an hour where only brokers are allowed to participate. People like you and me, retailers, are not allowed to participate. These guys would try to buy those 100 shares which were short and they'll buy it on my behalf. Okay, so at whatever price they buy it, let us say I had sold it at 150, right? And this guy buys it at 170 now. Now what is my loss? My loss will be 20 rupees per share. Okay, how did this take place? This took place in a normal market, or did it take place in an auction market? Answer is it took place in an auction market. Okay, this was a very short discussion on what is auction market. It's a whole lot of a discussion. If you want me to make a separate video on auction market, of course you can let me know. Otherwise, if you want to quickly know about it, as I mentioned, I have explained this completely in my basics of stock market lecture series. So if you want, you can go and check it out for sure. Okay, towards the end, a very important announcement. I hope you're aware that we have started blogs on our website rachanaranade.com. Okay, we have recently posted a blog on Reliance Industries. So Reliance Industries, Geo, its investments. Okay, so don't forget to check out the blog. The link is there in the description box. And one more very important point, towards the end of the blog, we are also putting certain promo codes for you all. Okay, so don't forget to check out these blogs and those promo codes as well. Okay, if you're liking my content, don't forget to share these videos with your friends on Facebook, Insta. I hope you're also aware about the Telegram channel. So take full advantage of all these other social media platforms as well to enhance your knowledge and to become more and more financially literate. Okay, so that's it from my side, guys. Jai Hind and bye-bye.